Hey, what's going on, everybody? It is 9:44, proof of keys. 'Twas the night before proof of keys, and all through the land, us hodlers were smiling with our private keys in our hand. Yes, it is January 2nd, my friends, and if you don't have your private keys, and you don't have your coin with your private keys, well, just remember, not your coins, not your keys, not your Bitcoin, man. So this video is going to cover the market cycle wears no clothes by my man Cole Garner. If you don't follow him on Twitter, you don't follow him on Medium, or even check out his article he posted here on Hacker Noon, I'll leave a link to it below so you can dive into it a little bit deeper. But he wrote this on August 21st, 2018. Very, very very good descriptive way to really understand how market cycles work. So we're just going to kind of dive into this article here, and you'll understand how he associates different things with the market cycle. And I was fortunate myself to get in May of 2017 to start purchasing crypto and investing and diving into this rabbit hole and realizing it's way more than just about financial gains and more about the freedom and the liberty that you know cryptocurrencies and a blockchain can bring to us. But this guy, he really nails it. So check out Cole Garner. Uh, follow him, give him a shout out, whatever you want to do. So just gonna read through this. Like I said, I'll leave a link for you guys to check it out in the description below. So 12 months ago, I dove head first down the crypto educational rabbit hole. So he got in August, say 2017, after 7 years as a Forex trader. So he's trading out on the Forex. That's cool. So he has some obvious experience. It's a steep learning curve. Dozens of market dynamics compete for relevance and attention. What follows is the single most important thing I learned in 12 months of intense study. One market dynamic stands above all others as most important for investors and traders to understand. It's a pattern, a simple, profound pattern that's been hiding in plain sight for years with all assets, and I've mentioned this in other videos. Faces of irrational exuberance. Understanding the pattern begins with this diagram of the life cycle of financial bubbles. They're all like this. The stealth phase, things are just slowly taking off. Then you have your first sell-off. Things dip, and then we're off. Media attention, enthusiasm, public gets in, the greed, the delusion. It's a new paradigm. Denial, we're not going down. This is just normal. And then you have fear, the capitulation. Oh no, what are we going to do? Then it gets back up to the mean, which I believe the mean for Bitcoin is somewhere around 5,000. I don't remember the exact number, but we'll get there, and then we'll start this whole cycle all over again. And he gets into that. The red line's path is not abstract. Overlay a chart of almost any famous bubble from the past century. It'll fit. Somewhat dead on, contour for contour. 1929 stock bubble, here it is. Way up and crash. 2000.com. Most of us watching this video, unless you're possibly one of my students, or maybe you weren't even born yet, probably, and we crash, right? 1998 era, just people were going after Bitcoin. Same thing. Here we go, crash. No, not exactly, but very close. Now, what happened after the stock market? It went back and hit new highs. .com bubble. Things went back up and hit new highs. Now, it's a matter of finding the right places to put your money. That's because the underlying pattern directly reflects global market psychology, the invisible hand of mass financial consciousness at the largest possible scale. The diagram is used to investors during speculative bubbles, but in crypto it's taken on a whole deeper meaning. A brief financial history of cryptocurrency to investors and traders. The history of Bitcoin is a history of 4 bull runs. 4 bull runs and 4 crashes. All 4 bull runs separately and individually rank among the most dramatic bull markets of the 21st century across all asset classes by growth percentage. Most dramatic. 2011, 2013, 2013 again. That was late 2013. And then we went 4 years and boom, 2017. Those were the dramatic runs and crashes. Okay, here's a bit of context so you have something to compare it to. Well, there's Nasdaq. Meow. Nasdaq again. Boom, 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 and boom, boom. Right? You look how they did what they did. Same thing with gold. Same thing with Google. Well, not quite Google, but you can see how Google kind of went more steady. And Apple had their rise, fall, rise, right? You're starting to see how things, like, take your freaking emotions out of it and understand, okay, well, hey, this next run up with Bitcoin might hit double what it was. But it'll come back down. It'll correct by about 85%. Although price growth percentage was mostly similar across all four bubbles, the price ranges those bull runs covered were very different. Each successive bull run went exponentially further than the previous one, and each post-crash low has been a higher low than a previous one, much higher. Consecutive higher lows is the definition of an uptrend, and that's what's going on with Bitcoin. One bubble, two bubble, three bubble, oh, four bubble. It doesn't look like an uptrend. It looks flat until 2017. Why? That's because the scale of the most recent bubble is so extreme that you can barely see the first three. But the same could be said of each previous bubble. Each went exponentially further than the one that came before it. So Bitcoin's third bubble, you see, yeah, I barely see those first two bubbles, and whoop, okay? A special setting helps us see the pattern. Shifting our charts to logarithmic scale equalizes earlier exponentially smaller price trends with more recent exponentially larger ones. We're able to more clearly spot patterns in price movement that recur cyclically and fractally independent of scale. Now we can see the four Bitcoin bubbles normalized to scale. Wow, that's pretty steep there. Bear market, pretty steep. Little bear market, right? Pretty steep. And we went pretty flat for a while, right? From 2014 to like 2016, we were, kind of flat. But then we got to 2017 and, well, 2016, when we took up again, and then we took off again in 2017. So you should be able to understand what's going to happen next. There's nothing stopping us, right? Going like this and hitting up, what, 150,000? I don't know. Who the heck knows? So, hey, buy one Bitcoin. You might need it later for store of value. We've seen a familiar sequence of events on repeat ever since Bitcoin's beginnings in 2010. By the way, happy early birthday, Bitcoin. We know tomorrow's a Genesis block when you were first created, setting us all free. Thank you. Whoever you are, Satoshi Nakamoto, thank you. Here are Bitcoin's four bull runs by the numbers. 2011, 4,100%. Early 2013, 2,000%. Late 2013, 1,600%. 2017, 1,900%. That's the growth rate for that year. So the first major top, then you had a 5x or 4.5x or a 16x. 16 times the previous top. We want at least 5. If you're looking at just the multiplier above the previous top, where do you think we should be from the previous top? If we go with the low multiplier, the 5xer, or even a 4xer, right? Let's throw the 16x out the window. Talking about the next high, the next top that we should expect to be at the top and say, holy crap, this stuff has gotten pretty good. We're due for an 80% crash again. Not crash, but a correction, a bear market, whatever you want to call it. So if the high was just, say, 20,000, we'll make this simple, and we'll use 4x instead of 5 or 4.5x. We'll use 4x. And we'll say we're going to get to 100,000 for the next run-up, the next high, right? We'll correct back down 80-85% back down to 15 or 20,000. Don't be a big dummy and try to buy Bitcoin when it's 100,000. If it's running, let it run. If you have some, hodl it. When it gets to 100,000, take some profit. Buy back in later on. That's how you'll start to learn how to manage your money. But the other part of it, by that time, we're going to start to see adoption. The 16x may be a 32x. I don't know. The final parabolic run length, 7 weeks. That's how long it stayed up high. 5 weeks, 2013, 6 weeks, late 2013. And we had 5 weeks, basically a month of it hanging around nice and high. What was the top? $40 in 2011, 260 in 2013. That was early 2013. Late 2013 was, just look. Oh, wow. Early 2013, I bought in at the high at 260. But at the end of 2013, I'm up 5x. I don't know. I don't know why people are so scared to, at least for the financial side of things. If they don't even want to dive into what Bitcoin actually is. But how far did it fall the first time? 90%, 83%, 87%. And I don't know exactly where we're at right now, but the 3150, I believe, was the low. So we'll do a quick calculation here, and we will take 20,000, no, 3150 divided by 20,000, so 85%. So that's right in line. It's below the 90, somewhere around these two, right? So again, take that into consideration. Could we go lower? Could we come down 90%? We could absolutely drop lower. We could run out of steam from where we're at right now, hanging around that 4K level, and go lower. But anyway, the big picture, the pattern is straightforward. If anything, one might argue this is the most accurate Bitcoin chart of them all. Absolutely. Look, they follow the same psychological chart. Okay? The market cycle is the pattern. The pattern guiding Bitcoin's path is none other than a mirror image of our collective psyche's relationship with greed and fear. Since 2010, the life cycle of financial bubbles has played double duty as Bitcoin's market cycle. It is our asset class's calendar of emotional seasons, and it's a cryptocurrency market's Rosetta Stone. Can you nail it down to time? No. It just depends on when it starts to hit those psychological barriers, the trend lines that are being developed through the different price fluctuations. And some people, got to get past 5. Oh, we got past 5K, or maybe the next, maybe 4,200 is a resistance level. I see that as a resistance level right now, and 5,500, and then 5,800, and 6K. 6K is going to be really tough. 6,800, 7,200. You can go back and look at the charts where there's support and resistance at those levels, and know that it's going to take a while to get through some of it, especially that 6K level. We hung out there for a couple months. So, unpacking the cycle, knowing how to operate effectively as a crypto investor or trader is predicated on awareness of one's position in the cycle. Currently, at the time of writing, we're near the end of Bitcoin's 4th overall cycle, near the bottom of the bear market stage. This article was published in August 2018, but identifying one's position in a cycle is only the first layer of the onion, peeling away the layers. Each cycle has well-defined seasons or stages. Each stage has its own unique set of market dynamics, imposes a different set of emotional and psychological challenges to market participants. History doesn't repeat itself, but it does echo and rhyme, like faces on a stack of Russian dolls. Each instance of a season inevitably shares its DNA forward cross-cycle with its younger, larger sisters. If you watch anybody talk about TA, they say, "What do you think is going to happen next?" Look left in a chart and look. Crypto Steve, Crypto Crew University. I really appreciate his technical analysis. If you're looking for someone to watch and learn some good technical analysis stuff, he doesn't give you everything. Or if you want to pay for his classes, you could do that as well. You can pick up books and learn this stuff. A lot of it, though, is removing your emotions from it. Understanding each season's external market dynamics and internal prevailing psychological terrain is critical to survival and success in this market. Bitcoin's market cycle. So the market cycle of cryptocurrency is an asset class. The cycle can be classified into 4 stages. Accumulation. So when things are nice and flat, that's when they accumulate, right? This stage lasts many months. Everything is low. Low prices, low volume, low volatility, low expectations. The previous crash is in front of the mind of retail investors and traders. The bottom may be in, but retail investors are traumatized and fear further losses. Institutional investors, whales, and smart money who sold on the way up and shorted on the way down are buying back in before the cycle starts all over. They are accumulating right now. Let me tell you, people are accumulating. Institutions are accumulating. Traders that know that we're near the bottom, at the bottom, somewhere or at the bottom have been accumulating. This is a period of greatest opportunity, and ironically and unsurprisingly, the period when financial media and the public pay the least attention. Pretty much. I'm sure a lot of people that bought crypto on the way up last year and the huge run up and are looking and saying, I'm down 80%. Sorry. It sucks. I hear you. I feel you. What are you going to do? Well, look at the market cycle and realize that that's all going to change. Stage 2, the bull market. Widely anticipated regulatory fundamental news event acts as a catalyst to push price to levels unseen since the early days of the bear market. Social media sentiment turns bullish. The dominant emotions are confidence, excitement, and a sense of great promise. Price grows incrementally and then retraces in cycles. Each cycle looks like 3 steps forward, 1 to 2 steps back, and lasts roughly 3 to 6 weeks. So, alright, keep that in your back pocket. Several growth cycles pass, and eventually the old all-time high is retaken. People who bought the last top are freed of their burden, reducing sell pressure across the marketplace. The enthusiasm of price discovery begins to compound. Retail FOMO builds on itself, and financial media fans the flames. In its first 100 days of price discovery, Bitcoin nearly doubles its old all-time high. So in its first 100 days of price discovery, so when we get back to that price discovery stage, in the first 100 days, you're talking a little over 3.5 months, we should nearly double our old all-time high, based off of what he's talking about. Not long afterwards, Bitcoin climbs out of its logarithmic channel. So basically he's saying, if I understand him right, we're going to get to 40,000, have a little bit of a sell-off, and then we're going to take off again. Climbs out. Bitcoin is still moving in cycles, 3 steps forward, 1 to 2 steps back. Stage 2, the parabola. That's when we go bonkers. I'll be honest with you, that run up we had last year, we went from like 5K to 20K in a matter of like a week. I was scared. I was scared out of my mind. Because I didn't think it made sense. But it did. Without notice, 3 steps forward, 2 steps back is abandoned. We have 3 steps forward and no steps back. That's the new normal. Bitcoin's price grows at a parabolic rate from this point forward. Retail FOMO becomes a global phenomenon. Oh, I gotta get some Bitcoin. It's at 100K. I should have bought when it was 3,000 and people said it was going to zero. I'm such a dummy. Hip-hop artists endorse ICOs. Crypto-related Google searches are at an all-time high. Exchanges are overwhelmed by new account sign-ups and temporary halt registration. Binance accounts are being sold on Craigslist for Monero. Institutional investors and smart money are saying, "I'm out. I'm taking my profits," but they're still net long the futures and derivatives markets because they know what they're doing. Experts speculate that we've reached an inflection point in the cryptocurrency adoption curve, and that price might never again go down. Experts. Retail buyers who sold in frustration after the last crash are now buying back in as price approaches its top. Don't be one of those idiots. The time frame for this last parabolic wave of buying has been amazingly consistent across parabola. Historically, all 4 times it's lasted 5 to 7 weeks. Put that in your back pocket. So when we get to that parabola, right? When we get here, what we could do, we got 5 to 7 weeks of just getting delusional. And oh man, we hit that whatever price. So we could get here to that 40K and have a sell off back down to 13 something, 10. and then we're going to gradually go up, and we're going to hit another parabola. It's going to get crazy. Okay. Where is the smart money takes profit? Right, the parabolic trend is over. Price crashes violently, about 25%. It tries and fails to retake the all-time high. Most retail investors think it's a healthy correction and aren't selling. Profits taken out of Bitcoin are put into altcoins. The altcoin market goes on an exponential parabolic bull run. And that kind of happened a little bit. You can see how Bitcoin came down, but yet some of the alternative coins were still up there in price. Wells and institutional investors have been scaling out of their positions for many weeks and are now net short futures and derivatives markets. This period lasts roughly 6 to 8 weeks. So after we crashed down here, we got 6 to 8 weeks, and we just start coming down. Anyone who sells in profit during this period did a great job. Crypto Twitter is bullish. Stage 4 of the bear market. Sharp, violent. I don't know what happened with that video. Oh, there it is. There's bark mark. Sharp, violent. It's called capitulation. Sometimes it takes a while to get there. Followed by weeks of sideways price action. So we came down. So he's calling capitulation. This is what's crazy. He's calling capitulation this is what he's calling capitulation. And we came up and we tried getting back up there and we couldn't, and we tried getting back up again. And then we went sideways for several months. Probably, I think, from whenever he wrote this, around July, August. Kept going at the 6K level. And then when the bottom dropped out, retail investors haven't been through a full market cycle, failed to take profit, and are wrecked. Anyone who bought at the top is now at risk of selling at the bottom. Crypto Twitter agonizes over a trend line for months. Bearish analysts who offer historically accurate price projections were eviscerated in the court of social opinion. I'm telling you, it's going to slow. With each new low, a chorus of social media influencers insist the price has just bottomed, that only fools don't buy the dip, and that alt season is just around the corner. Bullish relief rallies are met by wells shorting the futures markets, regulatory FUD, high volume institutional market selling, bag holders exiting at support turned resistance, exchange hacks, ICO scheme as last month's FUD repackaged and released as this month's FUD, and poorly explained liquidity dumps, somehow loosely and improbably related to Mt. Gox. I would argue, though, that that person that sold to Mt. Gox really had helped drop the market at certain points in time. They were just certain price points when they sold. Anyway, the final drop happened suddenly on high volume, triggering an impulse wave of stop losses and panic selling. It appears as a long wick on the daily chart. Many retail investors have just sold the bottom. Prices that technical analysts have been salivating over for months are available for a handful of hours. This happens in the middle of the night where you live. Anyone who didn't place buy orders sleeps through the bottom. You can view his buy orders here. Gold Garner on Twitter. There's his buy orders. 4 hours. Good old shellacking. Big question, where should I place my orders? Buy orders. That's a personal decision based on your own risk management and your own technical analysis. I've layered my buy orders. And you can see where there were certain price points at certain key resistance levels where you put more in. So once you get past, once we get past that level, we're good. But that's where he had his buy orders in when we were at the 6K level. You can see when it was August 20th, Bitcoin capitulation, 4-hour candle. What were the prices at there? We were at, what's the time on this? 2014. So that's where he's showing a 4-hour on 2014 when things crashed down. It was on the 4-hour chart. If you didn't have your buy orders in, well, you missed that absolute low. In the end, Bitcoin touches bottom, roughly 80% below all-time highs. This brings its retrace to roughly the same levels as all previous Bitcoin bear markets. Accumulation of capitulation. We're almost done, but I'm hoping you guys are learning from this. Our tour of Bitcoin's market cycle is complete. Post-capitulation, the retail market will be processing shock and awe. The low volume weeks and months that follow are time of opportunity for savvy retail buyers that fiat available on the sideline. With fiat available on the sidelines, hey, if you have money on the sidelines, now it's time to buy. Is what he's saying. Bear market buying must be done strategically. I recommend CryptoFan's excellent tweet storm on this subject. Follow at CryptoFan. They give you some good um, information on how to buy in strategically. Bitcoin's market cycle is the cryptocurrency investor's North Star. Knowing how to operate effectively as a crypto investor is predicated on awareness of one's position in the cycle. Though awareness of one's position is not a guarantee of profitability, far from it. Just like following the North Star doesn't mean you'll find your way. But awareness of the star's presence paints a frame of reference on top of the world, one that makes a life or death difference if you're adrift at sea. The metaphor obviously extends to your portfolio in a bear market. The fifth parabola. Whenever we think about the future, it's important to remember the one and only thing about the future we know for sure, which is we don't know what's going to happen. This forces us to think in probabilities, which brings me to a hypothetical question. Picture a financial instrument from this inception. It has done one specific thing and done it cyclically, 4 times in 8 years at ever-increasing rates of scale. The question over the next few years, what's the highest probability scenario for that asset's future? Do you think Bitcoin will stop doing the thing it's done 4 times in a row? It could. That absolutely could happen. We have to acknowledge that. But is that the highest probability scenario? No. Absent poor fundamentals, an object in motion tends to stay in motion. And Bitcoin's fundamentals have literally never been stronger. The New York Stock Exchange announced it'll offer cryptocurrency custodial services along with their ICE-backed crypto futures. Goldman Sachs announced it's opening an institutional crypto trading desk, spent $300 million to acquire Poloniex. I believe Goldman Sachs is also doing stuff with Apple behind closed doors to incorporate cryptocurrency into the Apple wallet. A top cryptocurrency exchange, Japan, South Korea, Singapore, Switzerland, and UK continue to lead their regions in crypto-friendly regulation. MasterCard filed a patent for cryptocurrency fractional reserve system. What could go wrong there? I don't like it, but anyway. The SEC continues to deliberate on a Bitcoin exchange-traded fund. They're just trying to keep us from not needing them. The Lightning Network continues to grow, having already made Bitcoin transfers between institutions near instantaneous. The highest probability scenario is that the market cycle repeats itself a 5th time, and that Bitcoin and altcoins go in another exponential parabolic bull run, and then crash afterwards. So be ready for the crash. So position yourself for it now and in the months that follow as best you can. While prices are still low, the 2 most important skills to learn in preparation for the next cycle. Risk management. Success can't happen without it. Learn how to take profits during and after a parabolic advance. Become a devoted student of this arcane, insanely relevant skill. So I just felt like he summarized everything, and I hope you guys give Cole Garner some following. If you don't follow him on Twitter, I'm not sure if he has a YouTube channel. Look for that. Regardless, definitely take something from this. Know that we're probably low. We could go lower if we kind of run out of steam, or we're gonna start heading back up. We'll go up and we'll come back down. We'll go up, come back. And this may go on for several months, and then we'll hit that all-time high again, and we'll double it, and then we'll have a pullback, and then we're gonna go on a parabolic run, just as the market cycle shows you. So be ready for that. Be patient. Warren Buffett didn't become rich overnight. He knew how to buy when there was blood in the streets. That's what you do. And when everyone else is selling and prices are low, you should be buying. Like the stock market right now. Everyone's worried. They're selling. Some people are just going to hold on. And that's fine. You'll be fine. You'll be okay. Provided the stock markets stay trading the way they trade. I think we're going to move over to peer-to-peer. But anyway. I love you guys all very much. Hope you learned something from this. And we'll see you in the next video. If you haven't subscribed, please subscribe. Hit that bell so you don't miss any good information. Like I said, this is a new year, trying to get videos out every night. I got 2 more things I want to cover with you guys, so check out the next 2 videos too. Peace. Love you guys.